but like this. So what happens if supply reduces? What happens to price? So we know where equilibrium price is. Equilibrium price is here. So remember, this is a massive drop in supply. Do you agree that that's your analysis of that report, yes or no? Yes or no? It's got nothing to do with demand, has it? It's all supply. So it's got nothing to do with the blue line. So it's all to do with this red line. So what if the quantity or volume goes in that direction? What happens to price? Well, let's just move the red line in that direction and see what happens to price. So all we do is we move the red line, shift it to the left, right? So we're going to shift the red line to the left. What happens to the price? Equilibrium. Well, the price equilibrium obviously rises significantly, doesn't it? The price equilibrium rises significantly. And it would rise even more if we suddenly had even more demand, wouldn't it? So imagine that there was even more demand. And why might there sometimes be more demand when supply drops? Why might there be? You might say that doesn't make any sense. Why would there be demand increase if supply drops? Why would there be potentially a demand increase when supply drops? Any ideas? Because people start panicking about getting filled. People start panicking about getting supplied, right? So you, for example, during COVID, when there was a run on just about everything from food to toilet roll, the demand hadn't actually increased, had it? You'd still use the same amount of everything, didn't you? Yes or no? But because there's now a concern about the supply, everybody panic buys. Everybody says, well, I better stack up here. I better load up big style. So even if, now, so long as you've got your Jack and Ginger, I don't think you needed anything else, Jack, did you? You could actually just, you could just sit in the room and wait it out, couldn't you? So if the demand increases, whether the demand actually genuinely should increase, well, what happens to the supply-demand line? Well, if the demand goes to the right, so we shift the blue line to the right as well, what happens to the equilibrium price? Well, the equilibrium price goes even higher, doesn't it? Equilibrium goes even higher in that type of supply shock marketplace. And as equilibrium goes even higher, we start getting into a beautiful situation of a kind of compound impact that we get from just that one single piece of information. A lot of people are worried about getting their products filled, so they're willing to pay even more money to get their products filled. And we end up with a trade that came off 996s to 1046s, which happens to be a full 10-point, a full 10-point move, my arse, a full 50-point move. A full 50-point move, guys. That's crazy, isn't it? That is absolutely bizarre, but yet it's so visible, so clearly visible. And thanks to Nick, hopefully we were all watching it and trading it. So we all made a fortune on it, not just me. So sometimes it's good to see these things, isn't it? Sometimes it's good because it brings us to that party, brings us to the party line. We like it. We like it. We like it a lot. Anyway, welcome in, guys. We haven't gone through the data just yet. So let's do that right now. In terms of things that we're running into, we haven't really got much, so there's no real rush to get cleared on your data today. So we're going to be talking about this. Sammy asked a question about block trades. We'll cover that again this afternoon in Classroom. And it's about how do we know what it is. Well, we'll certainly cover that subject because it's going to be, I'd mentioned to Kim, it would be a great, perhaps a great topic for probably a slightly extended workshop. It would be called the Market Maker Edge workshop, and it's where we start looking at arrival rates across various different forms to start recognizing that if we lean on arrival rates, we're not guessing about trade entries somebody's already done that for us. What we're now doing is taking the market maker's knowledge and running a simulation as to where we could start joining the trade entry ourselves, and perhaps leaning on what turned out to be some great trades. I mean, the bond yesterday was a great example of that very thing. So we saw the bonds getting bought on an uptick. And like Sammy said, is it an exit price, or is it somebody exiting a short, or is it somebody buying into it? Well, it doesn't actually matter what it is. It's a buy trade. It's going to be a buy trade. We covered that in the commercial conversation. And of course, what we're now trying to do is get the market maker edge on whatever it is, and that's to then buy the low price from that block trade idea. And that buy trade turned into be $1,250 of profit in the overnight session, which was a very, very nice indeed. So let's get through this as a storyline, and quickly we'll see what we've got here. Japanese goods prices slightly hot, 2.6 expected 2.5, but 2.5 was a decline from prior of 2.9. Wage price pressure coming into Australia at 0.8. Well, that's in line with consensus. Wage prices on a year-on-year slightly higher at 3.4. So that's not a good set of numbers. That's not a good set of numbers in the overnight session for bond buyers at higher prices. So I was keen on the top edge. Reeve managed to take the top edge sell on bonds. I actually didn't get the top edge sell on bonds. I was too busy getting short gold at the top edge. And, and I took my eye off of the ball, to be honest. So I've missed out on that short sell. We did close it. I think I was expecting maybe a little bit more. Reeve wasn't. He took straight into that trade and got some nice money out of the short sell. So moving past the overnight session, coming into Europe, you can see that European CPI prints, these are final CPI prints, and therefore they're not likely to represent any opportunity to trade, guys. They're nearly always in line. Anytime you see this word final, it's been revised so many times that the final probably means it's accurate, right? It very rarely changes. So this isn't the type of print that you can price into your marketplace, because there isn't really any wiggle on this, right? It's nearly always spot on. You can see it is spot on this occasion, 0.3, 0.3, 2.2, 0.4, 0.4, 1.8, and 1.8. So anytime you see the words final in any of these outputs, just recognize that they're usually as much use as a chocolate ashtray. Okay, so they're not really that important. Even though they give this one a red rating, it's not really a red rating. It's just pretty much going to be what you expect it to be. Now, if it surprises on either side, then of course it is absolutely newsworthy. But don't try and price it in, because it's already been priced in during the revisions. Okay. Moving into the US session, of course, we've already seen some numbers at 12 o'clock. You saw all these mortgage numbers out the US. And again, what do you make of them? Mortgage market index, pretty strong, pretty healthy. Mortgage refinancing index, very strong, very healthy. Mortgage market looking very healthy on a 0.1% drop in mortgage rates. So you can see that mortgage applications up 10.9% from 3.1. Mortgage purchase index 160 from 158. Market index at 280s versus 250s, and the refinancing at 950s versus 770s. A very healthy looking US mortgage market. Whether you agree with that or not doesn't make any difference. That's what it is. Moving into the rest of the early session, there's nothing at 1:30, the usual US time slot, of course, nothing at 1:30. And that takes us to what we do have this afternoon of interest, and that is, of course, our usual run-in to the Oil Barons Ball, where we get the big award ceremony. Do we get a boo-boo or a BB trade? Do we get a booby or do we get a bee-boo? What are we going to get this afternoon? We're going to have to find out at 3:30, aren't we? But let's take a look at what they're forecasting. They're expecting a draw on crude stocks, but it's not as big a draw as it was before. They're also expecting a draw on gasoline stocks. And again, it's not as big as it was before. So the two main numbers, the two numbers here, the 0.2 and the 0.6, expecting to draw, suggests perhaps buying oil on dips would be the right trade, but obviously it would have to be at discounts because it's not as big as it was before. So we've got to be careful where we buy oil. And obviously the cheapness of oil is also something that we can lean on as buyers as well, isn't it? Right? Something we can also lean on as buyers. But the distillate's a little bit problematic, showing a build at 0.7 takes away most of the draws we have elsewhere. But the distillate's not it's probably the third most important. The most important is, of course, the crude number. But I rate the gasoline number as almost as important. When the gasoline stocks start coming out hard, there's going to be a build of requirement from the crude stocks, whether it was there or not. So I pay a lot more attention to the gasoline numbers than I do as the headline stocks number, which is why we talk about that two-phased trade entry, the boo-boo type trade entry. So that's what we've got coming out at 3:30. Nothing really worth pricing into the markets, except that we do have a boo-boo looking trade outcome from this as a narrative, and therefore discounts with value do seem to be reasonable propositions to maybe buy from if you're interested in your long oil positions. You've seen a very toxic buyer come in at 9:30, and then a very slow grinding retest into the 62.60s has resulted in a fairly reasonable upside pop on oil, hasn't it? Fairly reasonable buy side pop. Now, coming into today's oil, it was 100 and bearish on the skews, wasn't it? 100 and bearish on the skews if you'd done your vol-to-vol storylines. But obviously, you keep updating that as you go through the day. And, obviously it changes. It doesn't always stay the same. But it was 100 and bearish. And at the moment, it's 80 and still relatively bearish, though, isn't it? So when you look at the vol-to-vol, you can see that the days to expiry are down to 0.25, which means we're running quickly out of time for these guys. And that means that we're running out of patience. So if you're long with this bearish skew, any type of run above the 63.25 area probably is going to get some gamma scalpers coming in. Do you agree with that? Do you agree that if you look at that chart, any run above 63.25 is probably going to get gamma scalpers? So what happened the last couple of times we ran above 63.25? What happened the last couple of times we ran above 63.25, guys? Well, the last couple of times we ran above 63.25, interestingly enough, we've already seen sellers coming in every time, haven't we? 63.25, we've already seen sellers coming in every single time they arrive into that price point. And you can see it's worked its way back out of those two price levels quite nicely in line with that sell side skew. Line with the sell side skew. So when you see a sell side skew and you see volume buyers coming in at this price, the market maker's just going to laugh at it and say, well, I'll take a trade and then I'll sell it to you, right? I'll sell it back down again. And this is something you start learning when you do the Market Maker's Edge workshop. We start to learn how the market makers will handle some of these trade ideas, possibly some of the exceptions that we see to these trade ideas. We start learning about where the market makers will position and where the block trades are going to come in, something that 99% of retail, 99.9% of retail traders wouldn't be able to tell you because they've never operated on a commercial trade desk. They've never done a block trade before. So they don't know where it's going to come in because they simply have no experience of it, and that's understandable. So numbers coming out, 3:30 is the next real good numbers. Nothing prior to that except, of course, nothing. Cash opens, of course. We've got the cash opens. But 3:30, get ready for the Barnes Ball, guys. And that's it. End of day. So welcome in. I'm going to grab some lunch and no hurry to get back to the desk today. There's nothing coming out at 1:30, so which is just as well because it's just 1 minute to anyway. So I'll see you guys shortly.